Hello traders, welcome to another video on BitMoney. Today we will show you a profitable trading strategy using the Fibonacci tool. We will also reveal our #1 entry technique that will enable you to make strong entries with tighter stop losses and larger targets to enhance your profitability in trading. Be sure to hit that like button and subscribe to our channel so that you don't miss out on any of our new videos. Let's get right into the video. Many traders use the Fibonacci tools, but most use them incorrectly. The most confusing part about the Fibonacci analysis is deciding the swing points to draw the Fibonacci levels. We will reveal our secret hack to remove all the guesswork and provide a mechanical framework to draw these levels. First, let's begin by understanding the Fibonacci sequence. Fibonacci is a number series that was discovered by an Italian mathematician. Each number on the series is calculated by adding the last two numbers, so 1 plus 2 is 3, 2 plus 3 is 5, and so on. The fascinating thing here is that if you multiply any number on the series by 0.618, you will get the prior number. Therefore, 0.618 is known as the golden ratio. So some traders thought of applying this to trading, and the results were astounding. They discovered that the Fibonacci ratios could be used to identify the start and end of a price move. If you have been trading for some time, you are probably familiar with the fact that the price of any asset never moves in a straight line, but rather in a zigzag pattern. We have strong moves in the direction of the trend followed by pullbacks. These strong moves in the trend's direction are also called impulsive moves. An ideal entry can be made at the end of a pullback and the start of an impulsive move. The Fibonacci retracement tool will help us in identifying potential areas where the price would find support during a pullback if the price is in an uptrend. Going the other way when the price is in a downtrend, we first see that it makes a huge down move, followed by this small up move, which is essentially a pullback. The Fibonacci retracement tool will assist us in locating potential resistance levels, where the pullback may end and the price may begin a new downward movement. We have two steps in using the Fibonacci retracement tool to trade the market. Since this is a trend-following strategy, the first step is to identify the trend, as we will only trade in the direction of the trend. Once we have determined the trend, the second step is to determine the most recent swing high and swing low on the chart. Once we have identified these points, we can use the Fibonacci retracement tool to analyze and trade the markets. Now, to use the retracement tool when the price is in an uptrend, we must first find the most recent major swing low on the chart. For example, on this chart, this is the major swing low, and then we must find a major swing high, which is this point. Then we grab the retracement tool and plot it from the low of the swing low to the high of the swing high. You have to be sure that you plot the tool correctly from the low to the high. As you can see, the price found support exactly at the 0.618 level, which is the golden ratio. As we can see, price made an aggressive upward move, giving us a winning trade of about 368 pips. On the other hand, in a downtrend, we will reverse the process. First, we must identify the most previous swing high on this chart, which is this point, and then we must identify the most recent swing low on the chart, which is this point. Then we grab the retracement tool and draw, beginning from the high of the swing high to the low of the swing low. These three lines that formed are the Fibonacci retracement levels. Since the price is in a downtrend, we expect the Fibonacci levels to serve as a point of resistance. As you can see, the market found resistance at the 0.618 level, which is the golden ratio, and immediately pushed downward, giving us a winning trade of about 196 pips. It is important to note here that in a strong directional market trend, pullbacks are very shallow and the price frequently respects the 0.382 level and will rarely go beyond it. In most mature trends, the price will always tend to respect the 0.5 and 0.618 levels to form support and resistance levels. The 0.382 level should only be used in very strong trends. Please note that Fibonacci shouldn't be used as a standalone strategy. You can add other confluences like trendline or moving average to get more confirmation before executing trades. If you have any questions about Fibonacci, pop them in the comments section, as I will do my best to give answers to them. Please like this video and subscribe to our channel to learn more and trade profitably. I'll see you in the next video.